Okay, let's do this. It's midweek update time. Joe with you here. It's the 7th of June. Interesting that I didn't get to talk to you for 7 days, but the 31st was our last one getting into this new month. And with the new month comes something new in the markets. I've got a fun class for today. It's going to be a little bit more analytical, but I think this will help. Once again, this is my opinion. It's something we share with this class. We all share. You guys know the rules. If you've got stuff to share, let's do it. Take responsibility for whatever we do. So, let's do the market recap, and then we'll dive into the fun stuff. The markets make a pause this week. It looked like it was going to hesitate last week, but then we had a pretty good push on Friday, and so far it's just been kind of blocks. I think it was either Friday or Thursday. We'll look at the chart here. The SPY and the Qs are at extended levels. If you guys do the top-down approach close to me, I'm very hesitant to do anything bullish, but it looks like this large tech AI surge is pretty much run its course, or it's taking a break. However, these markets are doing something very sneaky, I should say, in the mid caps, small caps, and underperforming sectors. I'm seeing lots of purchasing off the bottoms in the beatdown. So what we're going to do today is a couple of ways to how to identify sentiment change in the markets by your portfolio. So the sentiment is straight up bullish. I don't know what else to say about it. I've got a little bit more of a recap at the end to get more specific once we get deeper, but it is just straight up bullish. There's nothing, anybody that's been bullish, that's been going very well, even if you got a little bit of a hiccup and a pullback, it was probably for a shorter term. Sideways and bears have been working really well until recently. There's your first identification of the markets are changing. We have, and I'm going to pull up these. We're going to do something different. I'm going to pull up a bunch of trades we've been looking at over the weeks and see how they've been behaving as of recent time. Make a comparative analysis to them and identify, based on our portfolio and our performance, sentiment change. Economic data is expansion in some key numbers last week with the PCE numbers, some of the things the Fed didn't want to see. The ADP employment numbers shot up through the roof. JOLTS jobs up. And unemployment ticked slightly lower. It was, I think, 235. It was expected. It was 232. So I don't really want to call that a significant miss. But there's expansion out there. So we did get the services PMI leveling off this week. I'll show you. We had a very light week. We've got a very small week of economic data, which is interesting because that's probably why the markets aren't moving. But we do have a FOMC announcement next week. We do have jobless claims tomorrow. We'll keep an eye on that. But these markets seem to be about as non-eventful as the economic data. It's just flat. My trade ideas, we're going to jump out to live markets and do something fun, right? So what ends up happening is when I open up my portfolio, and this is probably something you guys have been experiencing, and I see that all of my bears are going up, and all of my sideways are not going sideways. They're going up or down. And all of my bulls aren't doing anything, right? Now, for the last few weeks, folks, I know that we've hit and miss sometimes when it comes to timing, but we've had some really good consistencies in bearish stocks staying bearish and neutral stocks staying neutral, I would say for over about a month. So I wanted to go through some of the examples with this class and see if we can identify, once again, sentiment change. It's one of the coolest things to do as a trader, and it's one of the most important things to do as a trader. So I'm going to go off of a list, a couple of trades, and I think I earmarked them here that we had been looking at over and over and over and over and over again, that because they were always doing well, that are kind of hesitating. So let's start with the obvious. This is one that maybe we haven't traded, but this is NVIDIA. This is the darling stock. This is what started the AI surge. This is what everybody in the world wants. Now let's take a look at what it's doing recently. This thing has been, and it's very hard to do. Let me move this over. If I get this gap out of the way, there we go. Now you can see that this chart has been, it has had its surge basically towards the end of May here. And then it just went gangbusters and just jumped up incredibly. So it's run its course. And what it's done lately, it's kind of tapering off. Now there's still some out there. Here's Apple. Apple came out. Good news, good this, everything's great. They launched their new headsets. Everything's fabulous. Apple's couldn't be any better, but it's kind of also getting a little bit tired as of late. Now, these are the things that cost this AI movement. Microsoft, however, I took a look at this today, and it should be a little higher. It seems like it's not quite. Nope, nope. There it is. There it is. Also, one of the leaders starting to pull back. So the first thing we're going to think here is, okay, and this is the conversation I want to have out loud with you guys. Is this just an overall correction? Everything that's oversold is bouncing. All those weak sectors and stocks are bouncing, and all these high flyers are actually pulling back. If so, this is the breather before we get the whole thing over again. All the tech leads and all the stuff that was weak is weaker. Or is this something a little bit more significant? And I'm going to go ahead and lean towards this is something more significant because of how these things are coming off of the bottom. Take a look at Microsoft's day to day. It's not finished, I understand, but look at the volume in the selling pressure. That's not the button I need, folks. I need my pen, and I don't know where I put it. All right, I'll find it eventually. Oh, there it is. I had it covered. So when you have this stopping point and this move today, now it's not done, but look at that. That's not a lot of participation. This is just, okay, we're not selling, we're just letting it go, which would lead me to believe this is a pullback. And in a lot of these high flyers that are slowing today, I'm finding the exact same thing. Let's take a look at Netflix is another one. It's actually higher today, but it's got a red candle showing that it's a little bit hesitant coming off of a top. Look at that, a little bit of a top here. We'll see where this volume ends. So yeah, these things are slowing down. They're showing signs of extension. Tesla's one that was up even yesterday when everything else was a little bit further down. So, oh wow, yeah, okay, so Tesla's just on its little parabolic push here. So this one might not be done, but there's a lot that are. Now what's perplexing, and this is what kind of hurt, let's jump into some of the sideways stuff that I liked for a long time. Delta Airlines, sideways we've been talking about for months. And I like to see the same faces here because you guys can follow along. This is one that we enjoyed sideways between this 36 level, I believe, and right around the 34. We made an argument of maybe going to 31 for quite some time. It is now starting to really bleed higher. Even at this point when it turned, I was still very confident and comfortable with sideways trades on this. No longer. Okay, well, that's no big deal. It's just a sideways stock. We know they don't stay sideways forever. Here's Wayfair. This one was our darling, right? We beat on this thing for well over a month back through here. We sat through a little bit of a hiccup here, guys. All right, a little bit of a hiccup, but it did adhere to the higher or the extended range of about 40. It's anywhere between the 40, 35. You can go as wide as that 30 if you wanted, but no longer. Look at that. That's starting to move away. Okay, cool. Sideways isn't working anymore. There's your first key that there is a sentiment change in the market that we need to pay attention to. Now, those are only two examples. Well, actually, there's not. We have another one here, SLG. This is a realty group. These are all from this class, and that's why I love it when you guys come back and revisit, because we can analyze them together as a class. Now, hopefully you've been noticing with, well, that's kind of the higher area. I believe that we're talking about 24 and maybe 21. I could zoom in more. But I hope you're also noticing this isn't something that's been happening over the last week or two. This is, well, we're Wednesday now, and I didn't get to talk to you from Wednesday to Wednesday. This is over the last few days. This is basically Friday, Monday, Tuesday, or Thursday, Friday, Monday. This is in the last few days with all of these. So all of our sideways are breaking, and they are breaking to the upside, at least these examples that we had. But let's take a look at some of these stocks that we've been kicking butt with on the bear side. Energy sector, materials that have just been awful, awful, awful. Look at these last 4 trading days. This is Friday, Monday, Tuesday, Wednesday. It's still going higher. So this isn't, unless this is one of the largest oversold bounces or short coverings I've seen, and there's not a lot of volume to it so far. And it could immediately turn over. It just depends. But this is something a little bit more significant, in my opinion, folks, of just a oversold bounce or a bear rally. I think this is kind of an investment or maybe some bottom fishing. Let's take a look at his buddy here, Caterpillar, also on our watch list. Not a lot of volume except for that initial surge that we saw on Friday, but look at the follow-through. There's no longer a short interest in what was kicking butt to the bear side. Let's take a look at 3M. In fact, I think 3M was one that we talked about even last week. as a beautiful opportunity to the bear side. Look at that. This isn't, I mean, here, let's do this. You guys can do this. So now hopefully this is resonating with a few of you. That's a bear rally. I could call that a bear rally, even though it did break above a resistance area. This is a bear rally. This, with this candle and this volume, is absolutely not a bear rally. It's almost a reset. And when you get a reset, it becomes an opportunistic, longer-term investment. So I don't know if we've seen that, hey, we've got a bunch of fund managers out there, you've got a bunch of sectors or institutional money that needs to go somewhere, but they cannot put it into this AI stuff. It's too high. Well, they got to put it somewhere. So maybe that's what it is. Is this a rotation? Is this a complete rotation in and out of anything? Way too early to tell. Way too early to tell. But absolutely, you and I need to change our sentiment outlooks. Our top-down approach can stay the same, but we got to quit. What was weak is no longer weak, and what was strong seems to be topping. This is a very difficult transition situation to be in, and I noticed this. Not only Friday, I just gave it away. Friday, that's an anomaly. But come Monday, Tuesday, Wednesday, okay, all of a sudden when I'm focusing on these bears, here, let me just do another one so you guys aren't looking at a static chart. Mosaic is one that has just been a beautiful one to kick around. Look at that last few days. It's not just one or two. It's general. It's across the board. I mean, you could take a look. I promise every single bear that we had last week, or let's take a look at it. No, it was 2 weeks ago. Dang it, I erased them. Oh, no, here they are. USB, I'll go through them a little quicker. I'm not going to zoom in, so you guys just take a look at the few days here. USB, look at those last few days. Rio Tinto, and these are also in basic materials, energies. These are the weak stuff. Look at that last few days. TFC, Trust. If there's another financial bank company. Look, it's just out of anywhere. So, Foxa, I found the list. That's a really interesting move that is still going today. So, even though these markets are showing signs, let me go to the home page here. Even though we're seeing these flat days, look at what the Dow's doing here, consolidating. Look at the NASDAQ slipping lower, the S&P slipping lower. But look at the Dow. We're not up 600 points. We're not up 500 points. But if you took a look at that Foxa chart, you'd think we were. Take a look at this heat map. Yesterday, this was all green. This was all red. Today, it's all green. Industrials, utilities is an absolute flight to purchase the weaker, underperforming sectors. All right, I think I've beaten that down you enough. So, identification of sector rotation, for at very least, just step out time. I got an email from a couple of my traders that are saying, look, I'm pulling out of this. I got stopped out of that. I need to get into this. I need to get into that. The answer isn't no. Stop getting into anything. And I mean, I guess that's the theme for today's class, which is unfortunate because I like to look at trades on this class, and we'll still look at the trades you're looking at. But this is one of those pause button moments. Let me get back to the PowerPoint, and we'll continue with the markets and stuff and the sector analysis because I wanted to show you something on the overall charts themselves. So let's go back here and get into our market analysis. So from Monday, Tuesday to Wednesday, you can see these markets haven't done anything. I made mention of this. I do back-to-backs now. I do the Tuesday end of day and I do the Wednesday. I swapped with Corey for the first part of the summer. We might flip-flop back Mondays and Tuesdays, but look at the Russell. 2.75% in 3 days. It was actually high again. Most of that was actually yesterday, and I imagine it's up again today pretty aggressively. And oil coming off the bottom there, but gold's doing nothing. Qs are sliding lower. S&P's doing nothing. The Dow's doing nothing. This is 100% moving into underperformance, smaller sectors, mid cap, and small cap, and we saw that. I mean, it's just going on. So there's positioning going on, and it's going to be super difficult to short some of those underperforming sectors that we enjoyed so much over the last month or so. So yeah, it's time to take our foot off the gas. What's weak is probably no longer weak, and what's strong might be exhausted. And I know as far as this class goes and my personal coaching, a lot of my traders have taken their foot off the bull gas for a while ago, about a week and a half ago. There are still some bulls out there, and we do buy some bulls, but it's kind of one of those things where we really need to let off that bear side aggressively here, because we're just going to get squashed if we are indeed in a sentiment change. Okay, so let's take a look at the SPY. What's difficult about this is I do need to be, or we need to be, selective on what is doing this. So I am still optimistic. I am still bullish, and I still have to be based on my top down. I might have just showed you my hand there, folks. I'll show you what my outlook is. But I'm going to be super selective in where I buy it. If it's a tech that hasn't come up yet, I'm going to do it. But I'm not going to be buying something in a downtrend that's falling apart. I'm seeing a lot of these financial stocks that look really tempting, but they're in downtrends. So find something that's consolidating. Would be beautiful, folks, is if we could find some of our sideways stuff that's breaking to the upside and put our money there. It stinks, it smells, it feels toppy, it's scary. However, to fight it is probably really going to be punishing. And I just noticed that when I open my portfolio and I see everything is red, it's time to change my sentiment. It's time to, or I reanalyze sentiment and change my outlooks. I don't have to flush out my whole portfolio, but I might want to approach it a little bit differently. Okay, so that's the SPY. Here's the diamonds. This one seems to be enjoying the most off of this bounce off the bottom here. This was that descending pattern. It's almost looking like a bullish flag pattern once you start to get up into this area. However, it's not moving lower. It's starting to move sideways from this point. We're seeing stuff come off the bottom. This is a difficult one to buy because it is just flat out bottom fishing. If you are an investor, then yeah, some of those things that we saw like Mosaic and 3M, and sure, but I don't want to play that game for the next 8 months. Let's wait for it to establish an uptrend and show some real strength, find out where the sentiment is going, and if we are going to get a rotation, we could see something pop. We've always talked about the blow-off top. We're in a blow-off top. In fact, let's get to that chart here because this one's a little bit boring. But this is where the majority of the move is into the diamonds. Here's the Qs. So we're watching the volcano erupt. That was my thing to say. Right here, I thought that was the first signs of a pullback, an absolute head fake. Nope, Thursday, and flat. This is churning. And what it is outside of Tesla today, right, the big ones just aren't going higher anymore. It's all the mid caps, it's all the small caps, it's all the other ones kind of pushing this a little bit higher. But it's not selling off yet. And when it does, I'm wondering if it's going to create a lot of a domino effect, right? This is all on a house of cards. This move here, this is built on sand, whatever analogy you want to use. This doesn't sustain very well if there's opportunity elsewhere. It's one of those things where it's like I just made 40% on anything that had AI related to it over the last 2 weeks. You want to take some of that profit and put into something that's down 30%? Well, you will if you're a long-term investor. So that rotation could hit, and if it hits, it's going to be pretty fast. All right. So what else doesn't help, and I think, look at that, I could fit the economic reports on one screen, is because we just have nothing to really go off of. We do have crypto, SEC investigations on crypto. It's specific. That's just the U.S. fighting against, hey, you guys did things illegally. Doesn't really seem to have too big of an impact. We'll see if it does. Maybe they'll uncover some things that'll carry forward, but right now it doesn't. And it is specific to crypto. These markets don't seem to be reacting to it negatively at all. So here's the financials PMI, kind of in line, slightly lower. This one a little bit lower. This is the ISM services. So both of these are showing that they're plateauing. It was the services that I had an issue with over the last couple of months because that thing never came down. Sure, durable goods orders were down a little bit, but services were up, 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 up. So that's showing a little bit of signs here. The trade balance ticked a little bit worse. I don't know what that's all about. We'll see. See what the debt ceiling, if that has any impact. Doesn't seem like it affected the markets. But this is all we got. This is all we got on Thursday. No news on Friday. So we don't have much to go off of until next week, which is an FOMC statement. We're just kind of stalled out here, and the markets seem to be stalled out, but they're sneaky bullish, if that's a good term. There's a ton of purchasing going on in all the places you wouldn't expect it. You guys saw some of those charts. Now, with that said, let's go ahead and pull the class. There's a lot to talk about today, but not a lot to really do. just because these markets are weird. Let's go ahead and launch the weekly outlook, and we'll start there and see where we are as a consensus. And we stalled out here at 83%, so I'm going to go ahead and close and share. Okay, we're flat with a slight bear bias, right? 30% versus 20. We got 10% there to +2, thinking that we might have another push. I could see that. If we stay consolidated here, and this is indeed a breather, we could get the exact opposite. We could see all that big moves in those bears fall right down, and another big push in all the big tech. That could happen. I could see it going anywhere. That's why I'm really asking you guys today what you think. All right, thanks for that one. Let's go ahead and do the monthly outlook and see if this is any different. Okay, 83%. Looks like we stalled out with the same group, huh? Good. Let's go ahead and close and share. Okay, here's something cool, and this is what I agree with. We have, it says 10% is at a 0, but 20%, 40% are +1, -1, 10%, -2, 20%, +2. What I like about the poll that I just read there, not a lot of you believe we're going to stay here. That's cool. So in the next month, this consolidation nonsense is going to be over. And I have to agree with that wholeheartedly. Just the way that the markets are behaving here, the way they're extended, the way we're starting to see these reactionary moves with really no underlying larger movement, because the larger stuff's not paying attention. But I have to agree with that completely. Thanks. That's actually pretty cool. It's interesting to think about, and it's a great thing to see as far as consensus goes. I agree 100%. This is that stinkiness that I don't like. I'm giving my SPY a 0. And the reason being is because you guys know that if I see extension, it is a negative mark. Above the 20, above the 50, 20 slope, that should be like a +3, right? But the extension is heavily negative, especially in the short term, in the way I weigh it. So I am 0 here. Even if this thing starts to go down, I'm going to stay at, actually I'll stay at a 0, and I might even bump it to a +1, depending what sentiment is. Why? Because it's a bull pullback. It's creating opportunity for me to get into it longer term. +2, also have to do that because, yes, consolidation, pullback, longer term, it has to be a +2. And I also agree, folks, it's not going to stay anywhere near this. That could flip-flop here if currency turns out to be a fraud, and it's going to take some pretty bearish move or some sort of sentiment or some massive interest rate hike by the Fed or it's to really shake these up. There's a lot of bullishness in these markets. Recession fears are gone, absolutely gone. And I think it's because these markets aren't showing weakness as quickly as what the Fed expected them to. I keep referring to it as a soft landing, and I want to be that guy. I want to be the soft landing. But if this isn't a soft landing, then all of a sudden it becomes a crash, right? So there's all sorts of fun things that could happen here. Check us out, speculation. Okay, thanks, guys. You can see we're all about on the same page. Let's get into that sector analysis, what Dan's talking about here. So let's take a look at it first. Now, this is from Wednesday to Wednesday. This is the 31st to today. What did Dan say? I can read this while we're here. How do we temper this bull movement with consumer defensive sectors getting crushed because of slowing consumers? That could be it, right? And he's got the examples, DG, Campbells, General Mills. Yep, those were actually, General Mills was on our bull list for a while. CAG, excellent. So look at consumer defensive. It is definitely the weakest, but it's up this from Wednesday to Wednesday because I think it's just this over. Once again, it's just a general purchasing of whatever you can purchase right now. So here's energy. This is the leading sector, and here's that same movement that we're taking a look at. Super volatile, super choppy. Look at this gap up, comes down, gaps down, goes up. Boy, I looked at a chart just yesterday that had the same pattern that I thought would be a nice consolidation area, or wait for it to break a floor or break a ceiling. Looks like this is moving higher in energy at least, and it is up, bumping its head up against that 50-day moving average. Is this something I want to buy long term? Absolutely not. But shorting it, I'm out. It's just too tumultuous. There's too much of a move, and there's something that's going on that I don't understand. And Dan, to answer your question, you're right. It doesn't make sense. And now if it doesn't make sense to me, I don't touch it. I do that all the time. You guys have seen me do that with reactions to news and earnings. If I'm going to flip a coin, I'll do it. But after the fact, after the news is earnings and done, and after I know what the announcement was and I know what sentiment is, I love to jump into these. Right now, I have no idea if this is just an oversold bounce, this is a mad dash to cover shorts, or if this is just institutional money being put to work, saying this is going to be a steal by the end of 2023. I don't know yet. So to answer your question, Dan, I'm sorry, I don't know. But it's enough for me to be cautious and stay the heck away from it, at least in the short term. So that's the strongest. Let's take a look at the weakest. This is that consumer staples. Yes, if we do have a slowing consumer, back to Dan's question, and just in general, then yes, this should go a little bit lower. The staples should go a little bit lower, and they are, even though it's technically up. I'll tell you why. It's because this is where it was last Wednesday. So barely up. In fact, it's probably moved down since I've been talking about it. But it's up from Wednesday to Wednesday. But this looks really ominous. This looks bad. You know, you're seeing some weakness in some of the staples. We'll go out and take a look at those, Dan, for fun. So you still have a general trading populace out there that believes the glass is half empty, believes in a recession, believes in a slowdown. As far as hiring goes, as far as big tech goes, as far as expansion goes, as far as the consumer goes, we're active. So you do have defensive players out there. I can't make heads or tails of it. So I'm going to sit down and wait. SEC investigation into Binance and Coinbase. It did have a hiccup. It was interesting to see that Bitcoin came all the way back up within 2 days, all the way back up to 27. It's sliding again. We'll see if we start to peel back this onion, if there's something much worse out there. There's lots of conspiracies behind cryptocurrency itself and how corrupt it could be. We'll follow that fun thing, but it's, once again, I don't think it's too correlated with the markets. Q's high basing, no signs of any selling pressure. So it's sitting up there. We got Apple parked, Amazon, well, I didn't see it Amazon, but Netflix is parked a little bit, Microsoft, they're slowing, NVIDIA, Tesla's still moving higher, but they aren't selling off. It's just simply taking a breath, and I think that money's finding other places. Sentiment, tech surge appears to be leveling off. Okay, I just said that. Purchasing in underperformance sectors. I believe it's more than an oversold bounce just because of the movement it's had. Or it could be just fear of people taking shorts and covering their shorts in the weak sectors and maybe putting it into mid caps. I don't know. We'll see where this rotation goes or when this plays itself out. Should be a little while, about a week. FOMC is next week. That could be a big deal. Economics showing expansion in key areas, but some signs of leveling off. So we're in this really interesting area of nobody knows what's going on, but they still want to overreact, and that's what I'm seeing. I'm seeing a lot of volatility, a lot of movement in and out of things. But not sure, there's no real true direction yet, and my portfolio has shown that. I don't know about yours, but it's time to I'm taking the foot off both pedals, bear and bull, and just going to see what happens over the little bit. But we can still take a look at some trades, right? If you guys want to share, I see some, we'll definitely talk about them. It doesn't mean that everything's bearish and everything's bullish and everything turned around. It's just my lists start to work against me. I'm just a little bit more cautious. All right, let me step away from my soapbox and talk about some trades. Felix bought AMD. Let's take a look at what you got going here. Gotta get off my pen. This is a July 7th, 124, June 132. Okay, let's zoom in. AMD's even taking a break. Remember, folks, this missed numbers. Didn't do well at all. Said we're doing AI. Bye-bye. Gone. So, interesting. But yeah, it's hesitating here. What were the strike prices here? 124, 132. Looks like it's slipped a little bit today. That's okay. 124 is going to be about right there. 132, probably here, right? Maybe those highs. I'm fine with that. Diagonal. Looks like a little bit of a flip-flop today. You've got this support here, so just be patient with it. July 7. Am I reading that right? Let me get my calendar up. Okay, sure. That's the first Friday in July, and then we have a June expiration regular, so that's a week and a half. You're still good. Looked great yesterday, but crashes down today. That's how it works, Felix. But you do have this really good landing zone here, this gap. Let that be your kind of your guide, and stick with it, folks. I want to say once again, I'm not abandoning anything. I'm abandoning my outlook. I'm abandoning maybe being, hey, whatever was bearish, stay bearish. Whatever is bullish, bullish. That's gone. I'm second guessing my scans. Some of these, and it's pretty obvious. Some of the charts that we've been looking at are just going the wrong way. I'm not dumping all the positions. I'm not going to freak out or adjust. None of that, because these can turn around. We know that. Real quick. Okay, what do you think about Merck? Thanks, Felix, by the way. Maybe I can write that down. We'll follow it along with you. What was that? AMD on the bull side. Okay. What do I think about Merck? Well, it's doing what I would expect it to do, but I don't know if I believe in it. Right? Merck was one of those ones that was a little bit weaker. It's one of these larger companies. Wait, did I read an article on it? Hold on, let me scroll down here. Sues the government over Inflation Reaction Act. Merck challenges U.S. government powers. Okay, yeah, they're doing something bad. This could be specific to it. I like the pattern. I like the move down. And, you know, it's healthcare, it's drug. It is a huge staple. But if it's in a lawsuit, it's kind of adding insult to injury. This could just be a reaction to that. But I do like it on the bear side. We'll keep an eye on it. It might be kind of hard to catch this falling knife. You guys have heard that term. Volatility is super high right now, I imagine. The vertical spread might be not very good. You can gauge that on a vertical spread. You can go look at the 107.5, 105 bear put spread, and you'll probably be paying $3 to make two, or excuse me, that's a 250 spread. Anyways, you'll be paying more than you can make. Volatility kicks you in the teeth sometimes. So follow it along, but it might just be specific to news. But I wrote it down. He's thinking for 1 or 2 weeks. Yeah, sure. I mean, you got a little landing zone here at 105, and if it slips past that, great. But I mean, the way that it's falling right now, it might be pretty difficult to do. Cool. Seasonal trading volume, and if you might think buyers and sellers will go on vacation equally. That's always a good one, Scott. Summers are supposed to be slow, and we're starting it. Right now, we should see the depletion of volume, which increases volatility, and that could be part of it. The interesting part about what's going on right now is the markets seem a little bit too active to be in a true summer. You will get seasonality, and this is a good question. Rob does a lot of studies on this, but it could be early summer, it could be late summer. There are markets where early summer, they're just dead, and then they pick up in August and September. There are some that stay pretty active, meaning volume doesn't drop, and that's the only way I can gauge it, Scott, is just check overall volume on average from April to May to June, July. And it's what also sucks is it isn't until hindsight that we know these numbers, right? So you can go back, and sometimes you'll get an active June and even early July, and then it just disappears in August. So it just depends on when people go or when people leave. But I imagine with kind of the AI mad dash, maybe that was it. Maybe it was just, hey, let's just get everybody in the AI and go on vacation and come back and see what happens. That definitely could be causing what we're seeing over this last few days, or at least what I've noticed. It really could. But do I know for sure? I don't. And then he says, will buyers and sellers go on vacation equally? That'd be cool. I don't know. Does fear keep you in the markets, or does greed? Can't tell. I know one thing, it'll be a lot lighter volume-wise. I would imagine all things staying equal, but that's something to think about. Sorry I don't have a more definitive question for you, Scott, but it does wax and wane. All right, cool. FSLR for Joe. Broke support this morning, need confirmation. A bear call with a target of 185. Yeah, look at this thing. Jeez. This kind of summarizes how I feel. So, first solar, it's solar. I wonder if they said they're going to put AI in their solar panels. Then they said, just kidding. Just right. I like making up stories. You've got an island gap right here. So, yes, I love the bearishness. I love the way it's going. I like everything about it. Be leery and aware of this island gap. Let me get away from the circle and draw some lines. What is an island gap? Just this. A little bit of a move, gaps back, establishes a range, and then it goes pretty much back to the range that it was. So this is definitely bipolar, but I do like this rollover a lot. Actually, FSLR. Today's action over the last few days, look at this pivot point that it set right through a consolidation area. This is kind of a make or break point for this stock. It feels like, right? There's that word again. But 185 for a target, absolutely. It's the top line of this island gap. I like it. It might get there sooner than you think. So whatever you're looking, you got a bear call. Hopefully it's for maybe a week. Maybe the rest of this week. Maybe a week and a half, right? But be aware. It's volatile. These things move a lot. Thanks, though. I got on the bear watch for sure. Thanks. All right. Let's jump to TSM. Might be a potential bull trade for you. Will not enter because I already have AMD. Oh, thanks, Felix, because you liked AMD as well. Same idea. Technology, semiconductors, anything to do with semiconductors, computer, big tech, AI, or the ability to have it. But this is kind of chomping around as well. Sideways to up, sure. Or the craze goes and this rolls back over. But it does have some pretty good support here. It's in the right area, but it's, once again, plateauing. This is definitely worth just putting on your watch list. I'll put it down as a bull. I'll put it down as a sideways bull, but with this candlestick today, this could actually roll back over. Let me put it down as sideways. Just watch it. I'll put a little bull arrow on it. Because we are right at a point, and this is the difficult part about what I'm seeing, at least for today, or at least once again, Monday, I was pretty confident on Friday. I was ready to bull it up. And then everything that I had on the bull watch just fizzled out. But then all my bears started kicking me around. So I stopped. And here we are today, and I'm not getting much more out of it. So in this stock, very similar to, does it do this? Or does it do what I expect, what I thought the markets would do on Friday, which is consolidate, take a breath, and move higher. So let's keep an eye on it for fun. Thanks, Felix. Trade and Abbott. I think this is one that Corey looked at yesterday as well, or Monday. Yeah, bouncing this around. Yep, good rollover. I should have put this on the bear watch for today. But yeah, Corey made mention of it on his roundup on Monday. I agree, Felix. It's a good one. Healthcare seems to be not doing well. Maybe it's rolling over in sympathy of Merck, or it's just, hey, people are just pulling out of it. I like it though. Good bear. Okay, that's Dan's comment. Let's move to, which I already read. It was just weakness in the staples. CRTO got a diagonal or a call diagonal. Okay, 32.5, 35. Okay, here we go. Communication services also hanging in there pretty good. It was down by tech, not participating this week so much, but they're up there. I like this. I like the breakout. It's had that same day. It might hesitate here. What was the target? 35. Okay, not asking much. That's good. 32.5. Right through here. I'll draw this. So here's the, that's about 32.5. Sorry, guys, not very straight. That's good. Absorb a pullback. I'm totally fine with that. Let me put it down on the bull. ERTO. It's extended, and that's a way to play it. Anybody that's kind of bullish to the SPY, a diagonal spread might be longer. Slow play diagonal spread might be pretty good here as well. But yeah, when you get this little bit of a pop here and you want to play it bullish, the first thing you want to do is kind of sell a point where it might pivot. Now, once again, I don't want you to go bearish on that because we're guessing a pivot. We're guessing, and that word guess is fine as long as it'd be easier to guess as it starts to roll over. So wait for the pivot at least to form. Don't try to force anything here. This is where it gets dangerous. This is where we start to get cute. This is where we think we can time a top, or maybe I should flip over and flip all my bears to bulls. And yeah, so just sit on your hands, folks. This is Campbells. Dan was mentioning earlier. Buying opportunity with this huge gap down. Okay, nobody's going to buy. Thank you. I hope I read that wrong. Drop today thinking it's a buying opportunity. No, it's not. This is not a buying opportunity. Absolutely not. This is what I don't want. This happens for a reason. Let's go down here. It's probably some sort of downgrade. Earnings. So they missed their earnings. All right. So and during the day the volatility is super high. Now, if you want to keep an eye on this thing and see what it does, fine. But now, once again, Dan, hey, I don't want to talk you out of something. If you want to buy this thing and then we can talk January 1st, 2024, I'm fine with that. But if you're trying to trade this thing for the next month or half, well, just give me half your money now and you'll thank me for it later. How's that? You've heard that joke. Okay. All right, let's go to, which again, I just got done saying cute. But that's not your fault because you wrote that before I got to that topic. This is Dollar General. You're going to probably the same thing, and it's still moving lower. See, there you go. This is what I expect Campbells to do. So let's not try to buy that. Here's Dollar General. It's starting to slip, right? A lot of the defensive look to me like they're giving up the ghost. They expect the economy to slow. But all the stuff that we love to beat down, the energy and the materials and things that are also they're very, I should say, sensitive to economic expansion and contraction, are bouncing. So, what's going on? I don't know. If you guys know, send me an email and then I'll tell everybody and we'll make money. Interesting, right, Dan? All right, just be careful. Whatever you're looking at, be careful. A, B, and B. These are pretty interesting charts. We're going to have to do a lot of research. You guys, we're going to have to go back to work now, right? It was too easy for a few weeks there, but giving it a lot of time to do what it needs to. Diagonal call. All right, has been 117, 114, 7723, and 714. Going to go about expiration week apart, 117, 114. Now, all right. Hold on, I want to get this right. Okay, so yeah, okay, I'm fine with that. She's give it some time. 114, 117, right where it's at. If this can stay above that 50-day moving Mesbin, I'm not mad at that. That's fine. It also had this pretty interesting participated move to the upside. Consumer cyclical, right? Dan was just talking about how those staples are really falling apart, but the cyclicals don't seem to be. We've got a very interesting market going on, folks. It's going to take a few days for me to figure it out. Okay, cool. Let me write it down. Can I put that down as bull Mesbin with a little sideways, right? Because you're doing this really kind of a sideways move and you're going to be patient with it. I'm okay with that. Excellent. Okay, so that's about all we got for today. Good. All right, let me jump over here and type some stuff up. And hopefully we'll get some clarity between now and next Wednesday. CRTO. Thanks for you guys' thoughts. I appreciate it. And I'm so nice to be able to read them and share them with everybody because I was ready to do this class and then I wasn't yesterday. So now I'm just happy to maybe I'll just ask everybody what they think and my thoughts. I'll bounce it around. If you guys want to send me an email, please do. Hopefully that helps everybody. Let's see, current slide here. There we go. Let me get rid of that. Cool. So here's our list. Keep an eye on that. And I do want to say thanks, guys. And Dan, thank you for kind of enlightening me on the consumer staples. I saw the chart when I did the strongest weakest, but I didn't really divulge deep into them like I did utilities and energy. Pretty interesting to see that, right? It's pretty interesting to see that there is some weakness and it's very heavily in those staples. So I'm going to do more investigation on that end. So I really appreciate that. Hopefully you guys do too. That's why we have this class, right? Lots of eyes out there. So awesome. All right, guys, I think that'll do it. Oh, let me draw a couple of arrows sideways and up and all that fun stuff. What did I say here? I liked Airbnb. Also sideways here, Mesbin. I like the diagonal approach and then TSM. Maybe sideways, but to the upside as well. All right, it just seemed a little bit lower, so thanks for that one as well, Felix. All right, guys, great work. Appreciate it. Let me know what I can do to help, and if I don't hear from you, we're definitely going to talk next time. All right, guys. See ya.